The second main reason that I invest over 30% of my family's money into Bitcoin is that I believe that Bitcoin offers an asymmetric risk-return ratio. All that means is that I understand that I'm taking on additional downside risk and I'm taking on additional volatility, meaning it's a much bumpier ride and has much higher potential drawdown risk. But along with that increased risk comes an asymmetric, meaning much higher potential for upside. The way you can visualize that and conceptualize that is to look at a back-tested portfolio. So let me try to break it down by talking about ways that $10,000 could have been invested over a 10-year period of time, and you see if you can tell the difference when Bitcoin is included. On January 1st, 2015, if you had taken $10,000 and put it in an S&P 500 index fund, which invests into the 500 largest companies in America, and you'd put that money in there and let it ride and reinvested all dividends, you would have had somewhere around $34,000 after 10 years. So you'd have compounded your money at a very good 13% per year by owning stocks, by owning an S&P 500 index fund. You would have taken $10,000 and without putting any more money in it, in 10 years, you would have been sitting on $34,000 in value. However, if you'd taken that same $10,000 and invested 90% in the S&P 500 and 10% in Bitcoin, things really get wild. That same $10,000 over that 10-year period with only 10% in Bitcoin and 90% in the S&P 500 index, $10,000 over 10 years would have been worth over $300,000 because of Bitcoin's insane returns. And they are insane. They're face-melting to think about. But that's what I mean by asymmetric risk return. The downside risk and the potential problems of an investment going south is well worth, in many cases, the upside potential that you are getting with an investment like Bitcoin. Because consider this, if you'd invested that same $10,000 into 9,000 or 90% into the S&P 500 index fund and 10% into a loser stock like Walgreens Boots Alliance that lost almost over 80% of its value in that same 10-year period, you still would have turned $10,000 into somewhere around $30,000. You still would have compounded your money at around 12% a year. So you took risk, you lost because you picked a real loser that lost over 80% of its value, and the downside was relatively limited because of its position size in your portfolio. Now, of course, by taking smaller positions in something like Bitcoin, if it does go up and go crazy, you are decreasing your potential return, but you're also limiting your risk. So it just becomes a position size thing for people to consider. So do I recommend you go out and buy Bitcoin or put a bunch of your money in Bitcoin? No, I recommend that you research it, that you read about it, that you listen to podcasts, and just try to figure out what this thing is. Because if you don't, you're going to continue regretting year after year after year that you didn't at least learn about it. The biggest question that we have today is those crazy returns that people have seen in Bitcoin over the last 15 years. Is it just because they were early? Are you too late? Did you miss the boat? Or is it possible that we're still early?